Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be solving now one question of dissolution of partnership where we will be solving the various adjustments. In such case, you are required to be more careful while reading the question because partners' names are sounding similar, so adjustment may go wrong. Ganga, Yamuna, Venna, where partners sharing profits and losses in the ratio of 1:2:3 respectively. That is 1/6, 2/6, 3/6. Their balance sheet as on 31st March 2011 was as follows. Balance sheet as on 31st March 2011. Let us go through asset side. Machinery, this will be transferred to realization account debit side. Furniture, realization account debit. Fixtures, realization account debit. Investments, realization account debit. Stock, realization account debit. Trade debtors, realization account debit. Cash in hand, this will be recorded in cash bank account on debit side. Profit and loss account, this is recorded on asset side, so this is a loss. That is profit and loss account having debit balance. This will be divided among three partners in their profit sharing ratio 1:2:3. Ganga 750, Yamuna 1500, Venna 2250. This loss will be transferred to the debit side of partners capital account. Let us go through the liabilities. Capital account of Ganga, Yamuna, Venna. Capital account credit. Contingency reserve. This will be divided among partners in their profit sharing ratio. Workmen's compensation fund. Creditors, realization account credit. Ganga's husband's loan. It's not partner Ganga's loan, it is Ganga's husband loan. So he's a third person. So this will be transferred along with other liabilities, realization account credit. Yamuna's husband loan, realization account credit. The firm was dissolved. As on that date, the assets realized as follows. Machinery 20,000, 1. Investment 7,000, 2. Debtors 7,000, 3. These three assets are sold, means amount is received. So bank debit, realization account credit. Ganga took over her husband's loan. This is a liability taken over by partner. Realization account debit and Ganga's capital account credit. Stock taken over by Yamuna. Yamuna's capital account debit. Realization account credit. Yamuna's husband loan was paid in full. So amount is paid. Bank credit. Realization account debit. Furniture and fixtures were taken over by Venna at 10% less than the book value. Furniture is 7,000. Less than 10% means 7,000. 10% is 700. So it is taken for 6,300. Fixtures 12,000. 10% is 1,200. So it is taken for 10,800. Venna account will be debit. Realization account will be credit. Even though assets are taken 10% less than the book value, that is a loss for the firm. This loss will not be directly recorded by passing an entry. This will get adjusted in realization account. Realization expenses amounted to 1,900. Cash bank account credit. Realization account debit. In addition, an outstanding liability of 2,500 was finally settled at 2,200 and paid off immediately. In addition, an outstanding liability. Now this is a liability which is not recorded in books of accounts. At the time of dissolution, we have come across this liability. This is unrecorded liability. It is not there in balance sheet. But finally it is paid for 2,200. Anyways, 2,500 was not recorded in balance sheet and liability is settled for 2,200. So even though there is a gain of 300, it will not be recorded because original amount of liability is not recorded in books. Final payment which has been made by the firm is 2,200. So this will be credited to cash account and debited to realization account. Liability towards workmen's compensation fund is estimated to be rupees 2,000 and has to be paid off. So workmen's compensation fund amount we have maintained in balance sheet. It is 3,500. Of this, 2,000 is actually paid as a workman compensation fund liability. Balance 1,500 which is not going to be used in future, it will be transferred to partner's capital account. The creditors were paid 12,000 in full settlement of their claims. Cash account credit. Realization account debit. Prepare necessary ledger accounts in the books of firm. Asset side, machinery, furniture, fixtures, investments, stock, trade debtors. These will be transferred at book value to realization account debit side. Realization account debit side to sundry assets, machinery, furniture, fixtures, investment, stock, trade debtors, total 84,000. Next we have cash in hand 3,000. This will be transferred to cash bank account debit side. To balance brought down 3,000. Profit and loss account 4,500. This loss will be transferred to partners capital account debit side. Partners capital account debit to profit and loss account Ganga 750, Yamuna 1500, Venna 2250. Let us consider liability side. Partners capital Ganga, Yamuna, Venna will be transferred to their respective account on credit side. By balance brought down Ganga 8,000, Yamuna 16,000, Venna 26,000. Contingency reserve 6,000. This will be transferred to partners capital account credit side. Contingency reserve is divided in profit sharing ratio 1:2:3, that is 1,000, 2,000, 3,000. Workmen's compensation fund 3,500. Separate account is opened to indicate proper utilization of workmen's compensation fund. Workmen's compensation fund credit side. By balance brought down 3,500. Creditors Ganga's husband loan, Yamuna's husband loan will be transferred to realization account credit side. By sundry liabilities, creditors Ganga's husband's loan, Yamuna's husband's loan, total 32,000. With this we have completed first step of solving the problem. that is transfer step. Second is realization of assets. The firm was dissolved as on that date and the assets realized as follows: machinery 20,001, investments 7,002, debtors 7,003. The amount is received, so it will be recorded to the debit of cash bank account. Cash bank account debit side to realization account, machinery, investment, debtors, total is 34,000. This will have second effect in realization account on credit side. Realization account credit by cash bank, machinery, investment, debtors 34,000. Ganga took over her husband's loan. This is a liability taken by a partner. Ganga's husband's loan is 10,000. This will have one effect: realization account debit. Realization account debit side to Ganga's capital account for taken over of husband's loan 10,000. This will have another effect in Ganga's capital account credit side. Ganga's capital account credit side by realization account loan taken 10,000. Next adjustment we have stock taken over by Yamuna at rupees 14,000. Asset taken by partner. This will be recorded to the debit of Yamuna's capital account. Yamuna's capital account debit to realization account. Stock taken 14,000. Book value of stock is 15,000. It is taken over by her for 14,000. Loss 1,000 should not be separately recorded. It gets adjusted in realization account. This will have another effect in realization account on credit side. Realization account credit side by Yamuna's capital account. Stock taken 14,000. Yamuna's husband's loan was paid in full. This will be recorded to the debit of realization account and to the credit of cash bank account. Realization account debit side to cash bank. Yamuna's husband's loan paid 8,000. This will have another effect to the credit of cash bank account. Cash bank account credit side by realization account. Yamuna's husband's loan paid 8,000. Next, furniture and fixtures were taken over by Venna at 10% less than the book value. This will be recorded to the debit of Venna's capital account and credited to realization account. Furniture 7,000 less 10%, that is 700, so it is taken for 6,300. Fixtures 12,000, 10% is 1,200, that means it is taken for 10,800. Venna's capital account debit to realization account 6,300 for furniture taken over. To realization account 10,800 for fixtures taken over. This will have now another effect in realization account credit side. Realization account credit by Venna's capital account for furniture taken 6,300, by Venna's capital account for fixtures taken over 10,800. Realization expenses amounted to 1,900. This will be debited to realization account and credited to cash bank account. Cash bank account credit side by realization account for expenses paid 1,900. In addition, an outstanding liability for 2,500 was finally settled. This was unrecorded, settled for 2,200. So amount we are required to take only 2,200. This will be recorded to the debit of a realization account. This is payment of unrecorded liability. Realization account debit to cash bank 2,200. This will have another effect in cash bank account credit side. Cash bank account credit side by realization account unrecorded outstanding liability paid 2,200. Liability towards workman's compensation fund is estimated to be rupees 2,000 and has to be paid off. It means from amount kept for workman's compensation, we are required to pay 2,000, which is actual liability against the fund. Here we have workman's compensation fund account. Amount is 3,500. Against this fund there is actual liability of 2,000. So here it will be debited. Workman's compensation fund account debit to cash bank, that is claim paid 2,000. Cash bank account credit side By workmen's compensation fund, claim paid 2000. Out of 3500, 2000 has been used to pay the claim. Now balance 1500 will be distributed among partners and it will be credited to partners capital account. Workmen's compensation fund account debit to partners capital account, Ganga 250, Yamuna 500, Venna 750. Here partners capital account credit side, by workmen's compensation fund account 250, 500, 750. Next we have creditors were paid 12,000 in full settlement of their claim. This will be recorded to the debit of realization account. Realization account debit side to cash bank for creditors paid 12,000. This will have another effect to the credit of cash bank account. Cash bank account credit side by realization account for creditors paid 12,000. We have given effect to all various adjustments. Let us close now a realization account. A realization account debit total is 1,18,100, which is higher than credit total. It means there is a realization loss 21,000. This loss is divided among partners in the ratio of 1:2:3. Ganga 3,500, Yamuna 7,000, Venna 10,500. This will be debited to their capital account. Partners capital account debit to realization account. Ganga's loss 3,500, Yamuna's loss 7,000, Venna's loss 10,500. After transferring this loss, we will close partners capital account. After closing partners capital account, in case of Ganga, we got balancing figure on debit side 15,000. In case of Yamuna and Venna, we got balancing figure on credit side 4,000 and 100 respectively. These amounts will be transferred to cash bank account. So it will have another effect in cash bank account. Ganga's capital account was having balancing figure on debit side. It is transferred here on credit side by Ganga's capital account 15,000. This is the amount paid to her. In full settlement, 15,000 is paid to Ganga. Yamuna and Venna's balancing figure were on credit side. It is recorded here on debit side to Yamuna's capital account 4,000, to Venna's capital account 100 rupees. These are the amount received from them in final settlement. Finally, we have closed cash bank account. We got debit equal to credit 41,100. That means entire ledger accounts we have done correctly. In this question, various adjustments were involved, so we were required to be very careful while solving this question, particularly adjustment relating to contingency reserve, workmen's compensation fund, outstanding liabilities, etc. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.